Greetings, everybody. Let's see. It is Friday, March 24th, and it is just before 4 p.m. The markets are closed, and all I can say is, whew, that's good. What a week. A lot of politics this week. This was really, the stock market has been very much driven by Washington, D.C. Of course, last week we had the Federal Reserve that officially raised the benchmark overnight lending rate by another 0.25%, right? So rates have gone up a little bit, and now everybody, their eyes have turned to D.C. And they've turned there because this week was a big push to get votes on the repeal and replace bill that was supposed to replace Obamacare. And what happened is it appears that the Republican Party was unable to pull together enough votes to pass it. So at the last minute today, the bill was pulled off the floor. Now, what does this really mean? Well, it means maintaining status quo. Okay, but status quo may be a little bit of an issue. And here's why. Basically, the markets have been building in this expectation that the Trump administration was going to push forward a pro-business agenda. And that means that they were going to reduce the regulatory environment. They're hoping to see lower tax rates, and they were hoping to see a bit of improvement on the way the healthcare is currently being managed in our country. Because one of the issues is that we've got, it's a big percentage of people's personal expenditures, especially for the middle class. So, there was hope for reform. If that reform doesn't happen, the pricing assumptions have to change. And it also brings into question the effectiveness of the Trump administration. So is this going to sort of percolate into other areas of policy? So will we maybe not see the same tax reform? The market has clearly not made its mind up yet, but it's definitely pulled back. We're about maybe 2.5%, 3% from the highs that we set at the beginning of March. And here we now are March 24th. We're most of the way through the month, and we appear to have stalled out. So we're watching this closely now. Now, as I've talked about many times, we have a series of indicators that we utilize internally. It's not emotionally driven, it's data driven. None of those have failed at this point, so I'm not suggesting that you should all panic. That's, in fact, the opposite of what I'm suggesting. But what I would say is that there is additional cause for research, and it's not concern. We just need to pay attention, right? Is the market assumption wrong about the effectiveness of the Trump administration? If it is, then expect repricing, which is a code way of saying that the markets will probably decline somewhat. If we see things get back on track as far as the Trump agenda is concerned, then we could see a continuation of the market expansion, but we just don't know yet. So this is as the data matures, we will adjust our opinion. But for now, investing is still long-term for the time horizon, and we haven't seen anything that indicates that the economy is slowing down or anything like that. So I would say don't lose any sleep over this. That's our job. All right. If you have additional questions, you're always welcome to call us. Our number is 541-375-0898, or you can email to info@littlejohnfs.com. And as a reminder, we always appreciate the thumbs up on the videos, as well as the opportunity to subscribe. So click on that, and we'll be sure to keep you in the loop as we post these in the future. Until then, the last thing I will sign off with is go Tar Heels, as they are playing today against Butler. So good luck to those guys, and I hope you all have a fantastic weekend. Take care.